Now, amid the escalating trade tensions between the world's two biggest economic powers, China.
What if I told you that in just a few hours, the U.S. lost $1,100,000,000, 0 cents, without a single bullet fired? That 2.4 million tons of soybeans once destined for China are now sitting idle, canceled, no warning, no explanation, just gone. This isn't just a trade deal falling apart, it's a message. And the ripple effects? They could hit your grocery bill, your investments, even the next election. In a move that sent shockwaves through global commodity markets, China abruptly canceled all existing orders of U.S. soybeans, totaling an estimated 2.4 million metric tons. The value? A staggering $1,100,000,000, 0 cents, gone in a matter of hours. So what exactly happened? The cancellations were confirmed by multiple U.S. agricultural export trackers and commodity analysts, revealing that China instructed major state-owned importers to withdraw from their U.S. soybean contracts, many of which were already scheduled for shipment. No official explanation was provided at the time of cancellation, but the timing is anything but random. Soybeans have long been a strategic pawn in the tense relationship between Washington and Beijing. During the height of the previous U.S. China trade war, soybeans were one of the first targets for retaliation. Why? Because the U.S. Midwest, a region heavily dependent on soybean exports, also happens to be a key political battleground. Disrupt that supply chain, and you rattle more than just farmers. This latest move appears to be part of a larger pressure campaign. According to international trade experts, Chinese cancellation is likely a direct response to new tariffs, sanctions, or geopolitical tension, especially concerning U.S. restrictions on semiconductors and high-tech exports. But there's more to it. Some insiders believe this wasn't just a protest, it was also a calculated economic shift. China has been stockpiling grain and diversifying supply routes by increasing imports from Brazil and Argentina. By pulling back from the U.S. market, they're not just punishing, they're pivoting. What makes this even more impactful is that many of these soybean orders were placed months in advance. Farmers had already planned, harvested, and in some cases shipped their product to ports. Now, much of that crop has no buyer. This cancellation isn't just numbers on a spreadsheet, it's real. Real crops, real workers, real losses. And for China, it sends a powerful message. We don't need your soybeans, and we're willing to take a hit to prove it. Let's put 2.4 million metric tons into perspective, because it's not just a number. That's enough soybeans to fill over 30,000 freight train cars, or enough to feed every pig in China for weeks, considering soy is a primary ingredient in animal feed. It's also equivalent to roughly 5% of America's total annual soybean exports. In short, this isn't some minor shipment delay, it's a massive agricultural blow. And the fallout? It starts with farmers, especially those in the American Midwest. From Iowa and Illinois to Nebraska and Indiana, thousands of soybean farmers were counting on those Chinese orders to break even or even survive. Many had already signed contracts with exporters, lined up shipping logistics, and paid for harvesting labor. Now, that entire operation has been turned upside down. Many of these farmers operate on thin profit margins. A sudden cancellation like this doesn't just cause a loss, it can push farms into bankruptcy. And while some large producers might find new buyers, smaller operations often can't pivot that fast. The result? Soybeans sitting in silos, unsold, and losing value. But it's not just the farmers. The entire agricultural export chain takes a hit. Grain elevators, rail companies, shipping ports, and logistics providers, they all depend on the smooth flow of U.S. crops to overseas markets. With 2.4 million tons suddenly canceled, all those moving parts grind to a halt. Workers get laid off, exporters face penalties, insurance claims spike. Then there's the international impact. When a top buyer like China pulls out, it floods the global market with excess U.S. supply that pushes prices down, hurting American farmers even more. At the same time, countries like Brazil and Argentina step in to fill the gap, potentially capturing long-term market share that the U.S. might not win back anytime soon. This wasn't just a business move, it was a strategic disruption. A billion-dollar deal evaporated, and the people feeling the pain aren't just wearing suits in Washington. They're wearing work boots in Kansas, Ohio, and beyond. So why would China willingly walk away from over 2 million tons of soybeans, a commodity they've relied on for decades? Is it about business? Or is there something much bigger at play? Let's be clear, this isn't just about soybeans, it's about power. Experts say the cancellation is part of a broader geopolitical chess game. Tensions between Washington and Beijing have been climbing, from disputes over Taiwan and the South China Sea to tech bans, TikTok crackdowns, and escalating trade restrictions. And now, the U.S. is reportedly considering additional tariffs on Chinese electric vehicles, solar panels, and battery imports. For Beijing, this soybean move may be a calculated retaliation. Why soybeans, though? Because historically, they've been one of the most effective pressure points. The U.S. soybean industry is a cornerstone of rural America, and rural America plays a critical role in U.S. politics. By targeting this sector, China isn't just hurting American business, it's sending a message to U.S. voters and politicians. It's economic pain wrapped in political strategy. But there's another layer, China's long-term food security plan. Over the past few years, Beijing has quietly diversified its sources of grain and protein. It's built stronger trade ties with Brazil, Argentina, and even Russia. These new partnerships allow China to import similar, and sometimes cheaper, soybeans without depending on U.S. suppliers. Combine that with efforts to boost domestic production and stockpile reserves, and you've got a country that's less vulnerable to American influence. By canceling U.S. soybean orders now, China is doing two things at once. 1. Punishing the U.S. for recent policy moves. 2. Signaling independence in global trade. This isn't panic, it's precision. Beijing knows this move will stir up noise in Washington. It knows it'll rattle American farmers and draw headlines. But that might be exactly the point. By weaponizing trade, especially in something as basic and vital as food, China reminds the world that it has leverage too. And in this growing economic Cold War, soybeans just became the latest casualty. For American farmers, the impact of China's cancellation is immediate and painful. Many had already invested heavily in this season's soybean crop. From seeds and fertilizer to labor and equipment, the costs are front-loaded. And with 2.4 million tons now unsold, those investments may not pay off. For smaller farms, especially those already in debt, this could mean financial ruin. Some may be forced to liquidate assets, lay off workers, or even shut down entirely. Beyond the fields, the cancellation sends shockwaves through the economy. Transportation companies, grain storage facilities, exporters, and port workers all rely on the flow of agricultural exports. With these deals gone, operations slow down and jobs are at risk. It also affects the broader commodities market. When a major buyer like China pulls out, soybean prices drop. That's great for importers elsewhere, but terrible for U.S. producers, who now must sell at lower margins or not at all. And the price crash doesn't just affect soybeans. It often spreads to corn, wheat, and other grains in the same supply chain. On a national level, this adds strain to an economy already juggling inflation, high interest rates, and global instability. The loss of $1.1 billion, 0 cents, in trade weakens America's agricultural sector, one of its most vital and politically sensitive industries. In short, this isn't just a hit to the heartland, it's a hit to America's economic confidence. With $1.1 billion, 0 cents in soybean orders canceled, the big question now is, what's next? From Washington's side, there are already calls for retaliation. Lawmakers are urging the Biden administration to tighten trade policy against China, possibly by imposing new tariffs or sanctions. Some are even suggesting redirecting federal aid to affected farmers, just like during the 2018 trade war. But whether that relief will come in time or be enough is still uncertain. Meanwhile, China isn't backing down. Instead of explaining the move, Beijing is staying quiet, a classic strategic stance. They're likely betting that the U.S. will feel the pressure domestically before making any counter moves internationally. It's a waiting game. Behind the scenes, Diplomatic channels remain open but tense. Trade representatives may attempt to restart negotiations, but with both countries locked in broader disputes, from technology to Taiwan, it's unlikely that soybeans alone will bring them back to the table quickly. Economically, the U.S. will now have to find new buyers for those soybeans fast. Countries like Mexico, Egypt, or parts of Southeast Asia might help absorb the surplus, but not at the same scale or price China once offered. In short, a full resolution isn't likely in the immediate future. Instead, we may be entering a new phase of economic friction, where agriculture becomes a recurring pawn in the U.S. China rivalry. For farmers, that means more uncertainty. For the global market, more volatility. And for both nations, the realization that this trade war is far from over. It's just getting more strategic.